Let me give you 5 reasons why I'm bullish on PayPal long term and I am a shareholder. Number 1, strong leadership. CEO Alex Chriss has a clear plan for sustainable, profitable growth, focusing on high margin opportunities and strategic innovations. His leadership has already shown results in boosting PayPal's efficiency and setting a vision for the company's evolution. Hey everybody, welcome back. Today we're diving into PayPal's 2024 quarter 3 earnings and giving you an inside scoop on what's driving their business, how their strategy is shifting, and why it matters for investors. There's a lot to unpack here, from payment volumes and margins to new product launches that PayPal CEO Alex Chriss believes will transform the company. Let's break it all down in this video. Let's start with the numbers. PayPal reported a 6% year-over-year increase in revenue from quarter 3, reaching $7.85 billion. This was just slightly below analyst expectations of $7.88 billion, which shows that while PayPal is growing, it is facing some challenges in hitting revenue targets, possibly due to competition and user engagement needs. However, the standout here is their adjusted earnings per share, or EPS, which hit $1.20, way above the expected $1.07. That tells us that PayPal's focus on cost management and profitability is paying off. They're delivering strong profits even as revenue lags a bit. Now looking at net income, PayPal brought in $1.01 billion or 99 cents per share, which is just a slight drop from last year's $1.02 billion or 93 cents per share. So they're staying profitable despite costs associated with their growth strategy. But after releasing these earnings, PayPal stock took a hit, falling by about 7% due to their cautious guidance for quarter 4, forecasting only low single-digit revenue growth. Analysts were hoping for a 5.4% increase, so the softer guidance has made investors cautious going into the holiday season. Now let's talk about payment volumes. PayPal's total payment volume, or TPV, rose by 9% year over year, reaching $422.6 billion. This growth is essential because it reflects how well PayPal is integrating into people's daily financial routines. More volume means more transactions, and it's a good sign for long-term engagement. Also, the average transaction per active account rose by 9%, which shows that individual users are using PayPal more frequently. And here's where PayPal's profitability shines. They reported a transaction margin increase from 45.4% to 46.6%. This means that for every dollar processed, PayPal is keeping a bit more as profit. Their overall operation margin also rose to 17.7%, showing that PayPal is controlling cost effectively even as they grow. For investors, these margin improvements are promising because they show that PayPal isn't just chasing volume, they're also focused on making each transaction more profitable. Since taking the reins as CEO last year, Alex Chriss has been shifting PayPal from a payments company to a full commerce platform. In the earnings call, he discussed how PayPal is now partnering with major players like Amazon and Shopify to deliver value-added services that go beyond traditional payments. Chriss sees these partnerships as essential to PayPal's transformation, helping the company evolve into a comprehensive commerce solution. 2 new products are central to this strategy: PayPal Fastlane and PayPal Everywhere. Fastlane, launched in August, offers guests checkout with a one-time passcode, boosting conversion significantly. Over 1,000 merchants are already using it, and it targets the 60% of online shoppers who don't use branded checkout. Then we have PayPal Everywhere, a program encouraging people to use the PayPal debit card for in-person purchases, offering 5% cash back in specific categories like groceries or gas. This initiative has added over 1 million new debit card users, driving in-store engagement and encouraging users to think of PayPal as more than just an online payment option. Another big focus for Chriss is Venmo. PayPal has expanded Venmo use beyond peer-to-peer payments. Payment volumes grew for Venmo about 8%, with increasing acceptance from businesses like Starbucks, DoorDash, and Ticketmaster. Venmo's debit card usage alone grew 30%, although this only represents 5% of all active accounts, meaning there's a huge potential for growth here. With more companies accepting Venmo, it's becoming a valuable payment tool for both online and in-store transactions. Alex Chriss also acknowledged that PayPal had lagged in checkout innovation. To address this, they've revamped the mobile and desktop checkout experience, which is already boosting conversions. It's worth mentioning that PayPal faces strong competition from Apple Pay, Stripe, and other digital payment providers. Their take rate, the percentage PayPal earns from each transaction, slipped slightly from 1.91% to 1.86%. This drop shows the pressure PayPal is under to keep its share of the transaction profits as it competes with other payment giants. So while these new products and innovations are promising, PayPal still needs to prove they can maintain or grow market share in a very competitive space. Looking ahead, PayPal expects a high teens increase in full year adjusted EPS, targeting $3.92 to $3.96. This cautious optimism shows that while Chris's strategy is still gaining momentum, PayPal is keeping expectations realistic, which I love. Chris also announced an investor day in February where he'll outline PayPal's long-term strategies, goals, and more details on how they plan to secure their position in the global payments ecosystem. Let me give you 5 reasons why I'm bullish on PayPal long-term and I am a shareholder. Number 1, strong leadership. CEO Alex Chriss has a clear plan for sustainable, profitable growth, focusing on high-margin opportunities and strategic innovations. His leadership has already shown results in boosting PayPal's efficiency and setting a vision for the company's evolution. Product innovation initiatives like PayPal Fastlane and PayPal Everywhere are game changers, making payments faster and more rewarding. These innovations aim to improve the user experience and increase engagement, creating more value for merchants and consumers alike. Next, they have a large engaged user base. PayPal has over 432 million active accounts with a growing number of transactions per user. This vast network provides a strong foundation for monetizing new products and services, which could drive further revenue growth. Strategic partnerships, collaborations with companies like Amazon and Shopify are expanding PayPal's reach and services. These partnerships not only deepen PayPal's integration into global commerce, but also open up a high new revenue opportunity. And lastly, we have focus on AI and fintech. By investing in AI and financial technology, PayPal is enhancing its service offering and staying ahead of the curve. AI-driven solutions are streamlining operations and improving user engagement, making PayPal a forward-thinking leader in the fintech space. It's true, PayPal does face its share of challenges, but with the company's strategic vision, innovative product launches, and a strong leadership team, this makes this a compelling long-term investment. Thank you so much for watching. I really appreciate your support. If you like these types of videos, be sure to like and subscribe. I've got a ton of these coming up for the rest of this year and next. If you're not sure what to watch next, check out another of my videos right here that YouTube is recommending. I think you'll really love it. Thank you again for your support. Take care, and I will see you next time.